Okay?
Speaking of the content, the 30% down assistance still around, right?
It is still around.
Could we make a flyer for that?
Yeah, Nancy have a flyer. You can always ask Nancy.
Yeah, anything, just email me.
Okay, thank
Okay.
you.
You're welcome.
Okay, so I'm so happy that you all have the tools. So remember the sustain keys for the 3 keys for the sustain business is resistible offer is one of them. We have the resistible offer. All the products we have here is awesome. Okay, and not everybody have the products that we have. That's funny, right? But we do. And you have to understand who your client, your ideal client. Okay, and the third one is very important. Keep learning. That's because knowledge is everything. When you don't have knowledge, it's hard for you to talk to your clients because they might ask for something new and you say, "Oops, I didn't hear about it." It looked bad, right? So I appreciate that everybody coming here to learn the new products every week. And even though we have 12-month bank statement a long time ago, we have DSCR a long time ago, but it changed. Every 6 months, guideline change. Why? Why guideline keep changing? Investor are the one who created the guidelines. And because they base on what the needs at the moment to create a guideline. If the needs is more about more down payment and bad credit score, they will provide something like that. If they keep the credit score so high, no one is gonna go for it. So they have to change the guidelines so frequent that you have to keep learning. So I'm gonna update you with all the new guidelines today for the 2 products, the 12-month bank statement and the DSCR. So after the training, you will understand why bank statement, why DSCR. And when your client comes to you, they tell you their own scenario, you will know right away which program you put them in. Last week we learned about what? No ratio and hard money loan, right? And today we learned about something else. So every week we're gonna learn some products so that we can help our client. Before we go on, there's some terminologies, and I know you all know about it. We'll touch base on it really quickly. So we all know we have a purchase loan. So somebody buying a home and they want a loan, that's a purchase loan. And we have a refinance written term, meaning somebody want to lower their interest rate or to change from 15-year fixed to 30-year fixed or 7/1 to 30-year fixed. We call refinance rate and term. We're going to change rate or term. Refinance cash out, meaning when someone want to take some equity from their home and use it, right? Somebody have $1 million in their home as equity, and they want to take some money out to maybe buy another home or build an ADU, whatever it is, that a refinance cash out. But so when you talk about second mortgage, it's also cashing out because somebody have a first loan right now and they don't want to touch it because interest rate is very low, so they don't want to touch the first mortgage. They don't want to refinance cash out. They can create a second mortgage. We can help them with second mortgage. And second mortgage, there are many options right now. Second mortgage, if somebody can qualify with income, we have 2 different programs. 30-year fixed, actually 30-year fixed, 20-year fixed, 10-year fixed, and HELOC. HELOC means adjustable rate. When I talk about fixed, the rate fixed for 30-year, 20-year, or 10 years. Okay, and they pay principal and interest every month. And when we talk about HELOC, the interest rate change every time the prime rate change. Okay, so when somebody can qualify their second mortgage with income, they have option. They can go HELOC line or fixed products. But someone who not qualified with income, we also can help them with second mortgage, but the only one option for them is 30-year fixed. Okay, that's it. But we can help them. The thing is, we can help everyone. Okay. So when somebody come to me or to you, we should say, okay, we'll find a solution for you, and then after we review the whole entire package of the document, we will give them a proposal of what we can do for them, and it's up to them to decide to move forward or not, because second mortgage is really the rate is really high. Okay, for fixed loan like 20-year fixed, 10-year fixed, rate is 9.5% interest rate for 30-year fixed. Okay, but for no doc, the rate is higher. It starts from 10.5%. See, so but if you need money, I talk to my client this way. I say, if you really really need money, you go for it. If you don't do it because it is expensive. I told my client that. I give them a choice. Like, hey, you come to me, I give you solution, but you choose to move forward or not because this is your own financial status. I cannot help you to decide for you. You know what I can do for you, but you gotta decide if you wanna move forward or not. Give them the freedom. They can say, okay, it's too expensive, I don't wanna go for it. That's fine, okay?
What's a typical example or usage of the HELOC versus the second mortgage, the fixed one?
I'm sorry, what is the question again?
What's a typical usage of the HELOC versus the second mortgage? The second mortgage, you have to get the money out, right?
Okay.
HELOC, you can leave it there and
Okay,
use whenever.
For HELOC, this is how it works. So second for the 30-year fix, 10-year fix, 20-year fix, of course, when you're done with the refinance,
You get
have
the
to
whole
take
chunk of money.
the whole amount money out, and you use it whatever way you want, and you pay it back every month. For the HELOC, when you complete the transaction at closing, the client has to pull 75% out of it, and then they can put it back in
For
if
how
they
long?
don't use it.
For how long?
As like right after like a week or two, they can put it back in. It's completely fine. It's completely fine.
75%, huh?
75% of the line. If they borrow 200,000, they pull out 150 at closing, and then they can put it back if they don't need it.
Okay.
That's completely fine. Yeah, but they have to pull out at closing.
And the rate is probably higher than the fixed second mortgage?
I see the rate is the same, but depend on if the same scenario, rate is the same. But the HELOC line, you only pay interest. Interest only loan.
But you can pay principal too. if
I think you have an option,
Yeah.
but for the 30-year fix, 10-year fix, 20-year fix, you have to do full PIM,
PIT.
principal and interest. Principal and interest, yeah. So,
Okay.
so that's about the second mortgage, where I am right now, can I borrow
Yeah,
that?
we should go back.
Why did you jump so far ahead of me? Okay,
There,
okay. All right.
there we go.
We are here. Okay, so we talk about refinance cash out, and second loan is a cash out too. We talk about loan to value, loan amount divided by your value of the home. CLTV, combined loan to value, so first loan amount plus second loan amount divided by the home value. So you gotta understand all the terminology. Debt to income ratio is DTI, is everybody understand it. Debt over income. Monthly debt over monthly income, right? FICO, when we talk about FICO score, we talk about the middle credit score, okay? So instead of say middle credit score, I say FICO or FICO score. Bankruptcy, you all know if somebody have bankruptcy, they can have a 7 year, chapter 7 or chapter 13 bankruptcy, right? And people can have foreclosure, that means they didn't pay their home, and then the lender come and take away the home and sell it for them.
That's 7 years too.
7 years. 7 years. Foreclosure most of time for conventional loan, it requires 7 years, okay? BK for conventional 4 years. But the BK with the short sale in there, it's 5 years, okay? So DSCR is debt services coverage ratio. That's the loan program we are going to talk about, okay? And what is debt services coverage ratio? It will measure the monthly rental income and the monthly PITIA payment. So PI, principal interest, T, property tax, no, P is property tax, I, insurance, PITIA, A is homeowner association. So if you have to pay property tax, insurance, mortgage, and homeowner association is one thing, one on the bottom, and the rental income is on the top. Monthly rental income divided by the monthly PITIA.
It's too much.
Too much. Let's do
So
that
this is
before.
for,
Cannot go fast on this one, Adeline. Cannot be lazy. Okay, let's do something. Can the people on the let me see it? Yeah, let me do it.
Maybe
So we have DSCR equal to monthly rental income of the subject property divided by monthly PITIA. So PI mean mortgage, principal,
interest.
principal and interest. T means property tax. I mean home insurance, right? Home insurance, fire insurance, flood insurance, whatever you have to pay. A mean homeowner association, HOA fee. So this is your, can you see it? Okay. So this is the DSCR formula. So if someone, if their monthly payment of PITII is 3,000 a month, and if their monthly rental income is 3,000, the DSCR ratio is 1, okay? That's a perfect scenario. But what if the monthly rental income is 3,000, but the monthly PITI is 3,500, the ratio will be less than 1. So the lender would prefer which one? The one with less money, the monthly rental income less or more? More, because that means they are doing something positive there, right? So the bigger the ratio, if it's bigger than 1, it's awesome. If it's 1, if the monthly rental income is 3, the monthly PITI is 3, then the DSCR is 1%. 1%, it's okay. But if it's 1.5, it's very awesome. But with nowadays interest rate, it's hard to get over 1%. Okay, we will talk about it a little bit more. Yes.
Michelle, I have a question.
Questions? Go ahead.
The formula you have DSCR.
Yes.
What's the on the top?
What? I'm sorry.
What's the denominator? The formula.
The top is the monthly rental income of the subject property.
Are we supposed to subtract on the fees and the stuff?
No, you
net or
just
the gross?
just the gross monthly rental income. For example, if you say you told lender my home is I can rent it for $3,000, and if they go online and search it up and it's worth 3,000 rental monthly, they put it there 3,000
Gross.
gross monthly rental income. Good question, Anju.
Are you sure about that?
Yes, I am.
Okay, because I thought that the DSCR is supposed to be the NOI
Oh,
by the debt service.
Okay, you talking about commercial. I'm talking about residential. So two different things.
But even
I'm
for
doing-
residential, you have to subtract the, let's say and I'm talking about the investment property or just the regular.
We're talking about investment property, but this is the formula for residential loan.
Okay,
This is residential. Just focus on. I'm talking about residential. I didn't talk about commercial.
but the residential, that's investment residential, right?
Okay. When you talk about commercial, you talk about something over 4 units, or official building, industrial building, office like dental office, doctor office. Those are commercial. We talk about 1 to 4 units, and specifically the DSCR formula I provided is for residential 1 to 4 unit formula.
Okay, I understand, but I'm talking about, let's say you have all the fees, all the expenses associated with the, residential investment.
Okay.
Like, for example, the property management fee and those things, are we supposed to subtract them?
For this
Or
particular
divide
loan
by-
program, no, we don't care. That's why it's easy, but it's still hard. I'm telling you, it's still hard. It's not that easy. We only talk about monthly rental income, and we don't consider any other factors that at all. Just the monthly rental income. We don't care about the rest. But it's still not easy though. I will tell you why. Okay, I'll show you more. So we're done with the terminology. We're gonna go to the Common Bank statement. Why this Common Bank statement is so awesome? Okay, you guys look at this. You see, look from the left side, from up to bottom, from the top to bottom. We have purchase loan. We have refinance rate and term. We have refinance cash out, right? And look at the FICO score. I'm gonna move the cursor so you know where I'm looking at. You see the FICO score, it starts from the bottom at 575. You can do loan for people with the FICO score 575. Hello, good morning, come on. Wake up, my goodness, this never happened before.
But the rates are higher, right?
Of course, but still people don't care about the rate when they have have this FICO score, they really want to get a loan. In the past, we have to bring them to the hard money loan, which is a lot more expensive. And the rate is over 10%. This one, the rate is still below 10%, by the way. But look, 575% credit score, okay? And look, and you look, I'm gonna move the cursor so you see where I'm looking at. So, right, purchase loan, minimum FICO score is 575, okay? And up here, you see owner occupied, 12-month bank statement. We don't talk about full docs because full docs, you don't want to consider full docs here. We're going to focus on 12-month bank statement, okay? Because you don't want to do full docs here because it's much better to do bank statement. If you do full doc, you don't need to go here. We do with different lender, different guideline, okay? Full doc, we don't go here. So we only go here for 12-month bank statement. And you see the loan amount, we can go up to $4 million. $4 million. Okay? And if for loan amount, oops, where I am? For loan amount less than $1 million, 1.5 million. Okay, so loan amount less than $1.5 million. And if your client have a credit score of 575%, how much is the down payment they need to come in? 45%, because the 65 is the 65 loan to value. 65% LTV meaning they have to bring in 35. You did it right. I'm wrong again. Oh my God. So I have problem with addition and subtraction. Okay, I gotta go back to algebra 1. Okay, so 35% down payment. You see, is it awesome? With your client who have 575 credit score, and we can do for them the loan with 35% down payment. This is so cool, right? And if, okay, but if you go up with the loan amount bigger, $2 million, you have to have a minimum FICO score of what? What is the minimum FICO score? For loan amount, yeah, because loan amount now is 2 million, and you see it start at 65% LTV and 65% LTV, and the minimum FICO score is 600. So you understand how to read this metric, right? So with somebody want a loan up to $2 million, they only require 600 FICO score, 600 middle FICO score. Okay, so how about someone that want a loan of $3 million? What is the required credit score?
650.
650. Good job. And what is the down payment right here? 25% down payment because 75% LTV, the max LTV. People on the Zoom, do you follow us here?
Hello.
Yes.
Okay, cool. Okay, now one more thing. How about somebody want $4 million? What is the minimum middle credit score?
700.
700. And how much down payment do they need?
35.
So 65% is the LTV, the maximum LTV for $4 million if they have 700 FICO score. Look, if they have 700 FICO score or more, they still have to come up with 35% down payment for $4 million loan. Because $4 million loan is a huge loan. Lender don't want to give you like 20% down or 30% down. Have to be 35% down payment. Okay. So we can go on and on with this table, but I think you all understand how to read it. It's so easy, super easy. So I'm gonna go on the other side. So 12-month bank statement for who? For only self-employed. Real estate agent,
Self-employed.
you are self-employed. Insurance agent, they are self-employed. Business owner, they are self-employed. Basically, a lot of people are self-employed nowadays, right? So you can, one hit, you can hit so many people out there, okay? And it for primary home, second home, and investment home. So that means if your client want to buy a home to live in, we can do it with the 12-month bank statement. If they want to buy a home for a second home, like a vacation home somewhere in Nevada, we can help them with the 12-month bank statement. Or somebody want to invest in a property, 1 to 4 units, we can help them with with the 12-month bank statement. Okay. All right. So it can be condo, townhouse, single family, 1 to 4 units, okay? But one more thing, for second home, it cannot be multi-unit. Duplex, triplex, and fourplex, never second home, okay? Either owner-occupied or non-owner-occupied, okay?
Single.
And nowadays I see second home rate is almost the same as non-owner-occupied rate, so don't bother. So just go for either owner-occupied or non-owner-occupied. Okay, so for every loan that have the LTV, the loan to value over 75%, that means they have less than 25% down payment. They have to have 6 month PITI reserve. No, LTV more than 75%. That means, that means they have to have 25, 30, or 35% down payment. Anybody, doesn't matter. As long as they have over 25% down payment, they have to have 6 month reserve. PITI reserve means, remember the formula, PITI, principal mortgage, principal interest, tax, insurance, and homeowner association, 6 month PITI reserve. For people who have less than 25% down payment, more than 15% down payment,
Less than 50%.
less than 15% down payment. Who have less than 15% down payment? Okay, good. Who will have less than 15% down payment? They have to have 12 month PITI reserve. Okay. Okay. So we have for the 12 month bank statement, we have a 30-year fixed and we have 7/1 ARM. We talk about it. 7/1 ARM means the rate gonna fix the first 7 years, and then every year it will change one time. Okay. Allow one mortgage late payment in the past 12 months. Of course, some loans they don't allow any late mortgage payment. This one is allow one mortgage payment. But when somebody have one late mortgage payment, their interest rate is really high. So it's better to not have any late mortgage payment. Okay. So for BK or foreclosure, more than 1 year, less than 2 years, it's okay. So if somebody have a bankruptcy or foreclosure over a year, less than 2 years, we can do it. But interest rate also very high. And they must have 35% down payment, okay? So normally we ask for 12 months of business bank statement or 12 months of personal bank statement. Normally I ask for both. 12 month business bank statement, 12 months of personal bank statement. I'll look to see which one I want to use. Because sometimes it's good to use the personal bank statement, sometimes it's good to use the business bank statement. And unbelievable, in the past few weeks, all the 12 month bank statement I have for my client, they make very good money.
So do they yield for 100% for business and personal?
100% for personal, but 50% for business.
Is that MC? Is that possible? Some business owner, self-employed business owner, they have combined together business bank statement and personal bank statement kind of mixed together. Is that possible?
No. We have to decide on which to turn in, right? Because we don't want to turn in so many. If we turn in 12 month bank statement of business, we only turn in business. If we turn in both, then condition will end up we ask so many questions. We turn in because the less we turn in, the less lender gonna ask. So we, as in our mortgage team, we will look at both bank statement. We will punch in the number. We'll find out what is the average deposit from the personal bank statement, what is the average deposit for the business bank statement, and whichever have higher average deposit, we will use that one. See what I'm saying? Because the deposit now is the income, but if not everything they deposit is the income. We talk to my mortgage team. They know better than me, like which one to keep, which one not to keep, because not everything is income, right? So something not income, they have to put it away. They only put the one that income, and then they average it. They come up with the number for the business bank statement. After we have the average number, we deduct by 50%. For example, we have 12 month bank statement, and the average is 20,000 deposit. But because it's business bank statement, we can only use 50% of that 20,000. So that means the income is 10,000 a month. But for the personal bank statement, if we enter all the data and then we see the average 12-month deposit is 20,000, we can use 20,000 as monthly income. Because personal bank statement, we can use everything. But business bank statement, you have to deduct 50% because the 50% is the business expenses. You see? So we have to look, because some people, they manage their money differently. I don't know. So we have to look at both and then we decide which one to submit to lender, because whatever one that provide more income we're gonna use. Okay, but as an agent, when you bring in the loan, bring completely 12-month bank statement from both sides, business and personal. The mortgage team, they work on the number. That's a lot of work, but they're gonna have to sit down and work on those numbers, and they will decide what to do with those bank statements, which one to submit. Okay? Okay, so for investment property, they do short-term rental. Short-term rental meaning Airbnb. Right now we do a lot of Airbnb. So somebody buying an Airbnb, they have to have 25% down payment minimum. If they want to buy a home, if they refinance, it's maximum LTV is 70%. Okay. Adult care facility. Okay, adult care facility. Vita, I have a lot of friends who have adult care facility. You know the home care for old people. In the past, we could not do refinance for them. Now we could. It is so awesome. We ask for their 12-month bank statement, Vita. That's it. We can do the loan for them. If they purchase, 30% down payment. Okay. If they refinance, I think it's refinance. It's 65% is the maximum loan to value. Okay. There is a when you do bank statement, and if it's an owner occupied and second home, there is no prepayment penalty. But when it's investment property, there is prepayment penalty. There's an option 1 year, 2 years, and 3 years. You can pick one, but 3-year prepayment penalty will give better interest rate. 1 year prepayment penalty will be higher interest rate. So that's it. Any question before we move on to the DSCR? I think we are done with the 12-month bank statement. Is it easy? So what do you remember? Remember the highlight, yellow highlighted one, self-employed, and you can lend anybody, owner-occupied, non-owner-occupied, and investment home. Because we're gonna do a role play later. And remember, what is the FICO score? The minimum FICO score? 575. And what is the down payment requirement for 575? 35%. Remember this because we're gonna have role play later. Okay. So self-employed, and you can do in owner-occupied, non-owner-occupied, and investment property. Minimum FICO score is 575, and minimum down payment is 35%. So cool, right? For the 1.5 million loan amount. Okay. We all remember, right? If you don't remember, put it down. Okay. DSCR. Okay, the difference about DSCR and the bank statement, DSCR is only for investment property. Only for investment property. When somebody comes to you asking for investment property and they are not self-employed, you cannot do 12-month bank statement. So this is your option. When somebody say, I am not a self-employed, I'm a W-2 earner, but my W-2 income and tax return look bad, I don't qualify for a mortgage, but I want to buy an investment property. DSCR, you should come up right away, right? DSCR. In this scenario, why don't we talk about no ratio? No ratio is more expensive, okay? And for today's training, we're gonna focus on 12-month bank statement and DSCR. DSCR is a better loan program compared to no ratio, but there is one thing about DSCR that it make it harder for us to do because it have a DSCR requirement, minimum requirement is 0.8. So for someone with the monthly rental is $3,000 a month and their PITIA is $3,700, their DSCR is 0.81%. If then they qualify, but if their monthly rental income is $2,900 and the PITIA is $3,700, they not qualify anymore. You see, DSCR, there's a problem right there. If the monthly rental is too small and the monthly payment is too big, they won't qualify. And in that case, we have to do no ratio. But today we don't talk about no ratio, but I just let you know for DSCR, if we cannot do it because of DSCR number is so small, lower than 0.8%, we can do no ratio. Okay? So for this one also we can do from 1 to 4 unit, and condominiums, single family, and townhome. Okay. DSCR is also good for IT people. Oh my God. Before, IT people, we have to do full docs for them.
What's I?
Now, IT, no, good question. IT are the people who have no social security number. They live in US, they work in US, and they pay tax and they file tax every year. In the past, okay, we have a IT loan program for the IT people by themselves, but we have to look at the income, right? Now, if their income is not enough to qualify for a mortgage, we can do DSCR for them. Yeah. We don't have this before. We have it now.
If they can qualify, you can go. No
We can do
ratio?
DSCR, but remember, it has to be investment property. Investment property, okay? So also, of course, IT people qualify for this program. We can help them with foreign national. So if you go online, you do this. If you speak in the community where a lot of IT people, you tell them, hey, I have a loan program that I don't need your pay stub, W-2 and tax return for who have IT number only. Trust me, they call you. Because in the past they have to come up with income to qualify. Now we don't need the income. We can do this. Okay? So DSCR is way to go for IT people as well. Okay? Foreign national, of course. No ratio, we can do foreign national as well. And you only have 30-year fixed, we don't have 7-1 on for this program. Okay?
Excuse me. Do
Yes.
they require like how many years the person have been working or?
Normally we have to have 2 year work history for full doc, but for this DSCR we don't care about income, we don't care about employment. When we do DSCR in the loan application, you don't put employment information.
Oh, we don't put employment.
No income, no employment. For no ratio, for DSCR, you don't put any information about employment. No employment information in the loan application.
Similar to.
No ratio, and DSCR almost the same. But the DSCR, they pay attention to the monthly rent. The no ratio, they don't pay attention to anything.
So they get the rent number from online?
They can do, it depends on the underwriter. They can do a search online, or they can make us to do a 1007 form, the appraisal, rental appraisal. So look, for the DSCR, for investment, we also can do Airbnb property with 25% down payment minimum, and for refinance, maximum LTV is 70%. Adult care, same thing, but look at the adult care, they ask for specifically the middle credit score 650 and above, okay? Also, we have prepayment penalty 2 year, 3 year, 2, 3, 1 years option. Also, the minimum FICO score is, what is the minimum FICO score for this program?
575.
575. Yeah, before we don't have this. I remember last year when we do the DSCR, our FICO score had to be 680 or something. 620? 680 or something. I forgot, but it's a lot higher than 575. I could never do any loan below 600 before. Oh, except I do harmony loan. Harmony loan I can do 560 FICO score. But this one, DSCR and bank statement, we can do 575. So, one thing you want to talk to everyone you know. At PacificWide, we offer all kinds of loans. You can call them crazy loans if you want to. You know, 12-month bank statement, DSCR, FICO score 575. No ratio, hot money loan. IT loan. No doc for IT loan.
So for the credit score, do they require minimum how many trade lines?
Normally 3 trade lines. Normally 3 trade lines, yeah, and at least 12 months. So, for loan agent, you go out there and you tell people, you tell all the realtor from different company, hey, if your client who need a loan, they have low FICO score like 575 or 580, let me know, I can do the loan for them. And if their income is not enough, let me know, I can do loan for them. I have all kinds of program. That's how I talk to realtor from outside the company. I talk to a lot of realtor from outside company, and they give me a transaction because they feel like I have all the loans that they need. You are a realtor. You can connect with other realtors. Say, hey, you have loan that you can bring to my company. You can do the same, and then loan agent, you should do that. Any question for DSCR? Because I don't want to go through the charge again because everybody know how to read it. But for DSCR, the maximum loan amount is 3 million only. Okay, 3 million.
But the other one was 4.
3 million. For this one, for the bank statement, we have maximum 4 million. So for the DSCR, it capped at 3 million because it's more risky. So refinance cash out for the DSCR, maximum LTV is 65% if loan amount up to 3 million. You see? So if somebody have a 6 million home and they say you want to cash out, you can go up to 65% of the home value. Okay? Not more than that. 65 the max. But 65 is a good number because I remember last year I do a $3 million loan amount and maximum is only 60%, and this one is 65. It's better. So every year it just get better. Okay. So if you have any loan scenario that you think we might be able to do it, just come to me and talk to me about the scenario. We're gonna work it out. A lot of time I have to sit down and think about what to do with the loan because sometimes it's so complicated that because each scenario is different. I have to look at the whole scenario and then I go back to all the program we have and I see which one fit them and I put them in the right pot. Okay, so do not turn down any loan. Any loan, bring it to the mortgage team. We work on it, and always for a loan that is really hard, always ask the mortgage team to work with me because I will have to sit down and find the loan that works for that particular person. Okay, so we're gonna learn about this real case scenario. Okay, so can you read that for me, Dylan?
Okay, Jane owns a hair salon and her credit score is 600. And she wants to purchase a house for $1 million for her owner occupied. She has $300,000 for down payment. Will Jane qualify for 12 months bank statements or DSCR loan program?
Okay, look at this one. So who is Jane? Who is she? What
She's
kind
a
of job?
business owner.
Business owner, see, meaning she is
Self-employed.
self-employed. So you can think about what right away? Self-employed. No, CFD. No, not
12
DSCR.
months. 12 months.
Self-employed in common bank statement, right? And her credit score, what is it?
600.
What is the minimum credit score for bank statement?
575.
575. She qualified, right?
Yes.
And she wanna purchase a house, only 1 million. And it's owner occupied. Owner occupied. Look,
Not investment.
Yeah.
business owner, by owner occupied home, 600 FICO score, she qualified for what?
12 months.
12-month bank statement for sure. See? So okay, so this is awesome. You guys got it, okay? Let's go to the next one. Patrick, read it for me.
Robert's FICO is 660 and he wants to purchase $1 million for an investment property, but his tax returns show no net profits. What loan program should you suggest, Robert? 12-month statements or DSCR?
Okay, so what do you see the key word in here?
Investment.
Investment property, right?
DSCR, right?
And what is that?
Yes.
Loan program? DSCR loan program. Is it easy?
Yes.
Is it easy? Okay. So, okay, for everyone, one more thing. We can do this type of loan everywhere in the US, any state, okay? So don't limit yourself. That's why nowadays you have to go on social media and talk about all the awesome program that we have here and tell them I can do it everywhere now. And anybody call you, yes, I can do your loan. In the past, I turn them around. I tell them, I say, hey, I'm sorry, I cannot do your loan. They call me from Texas, they call me from Florida, they call from New York. I say, no, I cannot do your loan. But now I can, okay? So you guys, we can do loan everywhere in the US with all kind of loan programs. If you don't talk about it, you miss out so much. And the people who couldn't find you, they're lost too. Okay, you have to, okay, if you experience something so good, you want people to use it, right? Like when you eat at a very nice restaurant, good food, you want to go home and tell your friends? Do you?
Yes.
Yes, you want to tell them, oh my God, that restaurant is awesome. I love the environment. I love the services. I love the food. Now, all this program is better than food because a lot of people need them. And if you don't talk about it, oh my God, you did service to the whole entire world around you. So you want to talk about it, okay? And today we're going to do role play. So people on the Zoom, you can call anybody to talk about it, or here you can talk in pair, or before we talk in role play. Before role play, we're going to look into them one more time, okay? So 12-month bank statement and DSCR. So 12-month bank statement for self-employed, for owner-occupied, non-owner-occupied, and second home. Of course, we require 12-month bank statement, either business or personal. Normally, we ask for both. Minimum FICO score is 575, and 4 million is the maximum loan amount. Okay? And then for DSCR, it's for investment property only. Remember that, only. And DSCR have to be over 0.8%. Okay? Minimum FICO score is 575, and maximum loan amount is 3 million. That's it. Can you remember all that? Yeah, it's easy. Okay, let's role play. I want you guys to pick your old partner. 2 people pair up and do this for me. And you have 5 minutes. Yes?
Okay.
Yes, you.
Alright, clear up.
I'm the borrower, you're here.
I think you
You guys have to switch because you have 6 minutes, everyone.
Okay, so I own a restaurant in San Jose. My tax return are not good for income qualification, and we want to purchase a $2 million
Tita, you have to
site
pay
out
me.
for our family. My kids are still in
You got to switch
so
roll later. Why did you pick up?
my credit score is 575. What loan program do you suggest? How much do I need to
Yeah, bank statements would work, so you have your own business, and then so you have your credit score 575, we do 35%.
So this is for 12 months.
Yeah, 12 months.
Right.
Alright. Yeah, for it's about $1.5 million property for investment purpose, credit score is 575. I cannot provide you my income taxes, there's no profit there. If you have a loan program, what does it require from you?
Sure we do. It's DSCR and let's see, 75 would be what the ratio. 65.
So how much?
So 35.
Yeah.
35% down.
Yeah.
Right? Is that right? Let's go. Let's go catch some fish.
Honestly, right?
This is amazing. So they don't have anything in a way, right? On both cases, right?
Yeah.
Because it's
Well, they show no profit on the tax.
Let me see how we do
It
this.
might be
what
that.
income qualification for the first one?
The first one, so the reason it'd be, so yeah, so the tax return, you would be reporting to any losses, so that's why you wouldn't be able to get it. But since they use a 12-month bank statement, they would just be, you would just be looking at the deposits instead of yeah, only looking at the business deposits. If it's a business account, then looking at all the deposits that came in from the business itself. And then if it's like a personal account, looking at the performance issues, independent. Yeah, and so that kind of thing. The restaurant probably has their own business, would most likely have their own business, their business account, bank account. So yeah, this
Technically, thing that people don't have money and make profits, so they can still borrow a loan.
No, yeah. a lot of clients, a lot of mine, or like we have a client that does like landscaping and all that, and he makes a good amount of money, but he doesn't report anything. Like,
Oh, really?
1,000, yeah. So it's like when he wants to get a loan, we've always had kind of like a little bit of a
I
problem.
don't wanna know about your tax.
No, yeah. So no, this is a good, really good program. Honestly, I should know about it back then.
Also, they use some of the cash.
Yeah, yeah, a lot of it.
They don't report it, right?
They don't, yeah, they don't put it on the books. They just keep it all on the table, sort of.
A lot of shops out here.
No, yeah, that's exactly, they run like that, and they don't realize that when it comes to, you want to get a loan, you want to get that, you have not much to show for it. Yeah, so, you get the cash in the moment, but then down the line when you want to, buy a property or whatever, you have nothing that really shows.
So, if you're a W-2, in both cases, there are business owners, right? Right. So, self-employed, so
Second one, they not self-employed because they have
actually it doesn't say.
but it doesn't. What do you need from me? I say I take it. But it's investment. You can do both. You can do both.
How about if you're W-2 and you don't have enough income?
W-2 don't have any income, you can do DSCR.
Really? How much maximum loan they can get? It's pretty much the same, 3 million?
Yeah.
Really?
Yeah, for that one.
But what if,
I mean, if they have much income, no, they probably wouldn't qualify. If they don't have much income, let's say like through W-2,
right,
they
they're gonna trip on
can
it.
use the rental income if they do have a rental and whatnot. Use that as income. Yeah, basically, it's like have it over the 80%.
I don't have money, you know. You see, my iPhone is so, my iPhone is so falling behind, you know. My iPhone, this is really old. And now update. Now my iPhone is not as fashionable as yours. This is update. This is better than mine, you know. I think this is 11.
That's pretty good. Let's put it on my wood.
Because unless, yeah, it's working good. Unless, I never want to.
Thumbs up, everyone! Alright, I think you got it.
So much fun.
Yeah, fun. Yay! That's the whole point. Okay, so the first. Yeah, let's have some fun. Okay. So let's read the first scenario. Jose, read the first scenario.
I own a restaurant in San Jose. My tax return is not good for income qualification, and we want to purchase a $2 million home in Sunnyvale for a family. My kids are still in middle school, so we need a good location. My credit score is 575. What loan program do you suggest, and how much do I need for a down payment?
Okay, what is the keyword, everyone?
Owner occupied.
Owner-occupied and self-employed. Okay, so we can do what loan?
12-month.
12-month bank statement. Yay! Okay, awesome. You all get it. Okay. Tino, read me the second scenario.
I want to buy a $1.5 million property for investment purpose. My credit score is 575. I cannot provide you my income tax since there is no profit there. Do you have a loan program for me? What is the required down payment?
Okay, this one I make a mistake and I think Patrick, give me tell me, because in here I talk about tax return and no profit. It makes people feel like, oh, is it self-employed? But actually, I mean, this person is a W-2 owner, but I didn't put it there. So if it's a W-2 owner, they're not self-employed, which program are you gonna suggest to them?
DSCR.
DSCR. And if this person is a self-employed, what program can you suggest them?
12 months.
Term and bank statement, right? Either way, if they are a business owner, you can provide them the term and bank statement.
Yeah.
But even for self-employed, can they still do DSCR or only for W-2?
I'm sorry, self-employed. For self-employed, they can do anything. Self-employed, they can do DSCR too.
You can still suggest.
Yeah. The reason why I focus on self-employed for term and bank statement because term and bank statement is a much better loan program than the DSCR. Because term and bank statement, the money they have in the bank already their income. We don't care about the DSCR number. The DSCR number is the hiccup there, the bottleneck right
Because
there.
it's harder to qualify.
It's harder to qualify because of the DSCR. We don't want DSCR until we have to do DSCR.
As
We
far
wanna-
as pricing, which one better?
Pricing bank statement is better too. So bank statement is the best program between these two. By the way, I do bank statement. I'm gonna give you the real scenario with the interest rate so you know what it is. So we do a refinance cash out for our client with 60% loan to value. Refinance cash out. Loan amount is about 900,000. Rate is 7.125% for 30-year fixed owner occupied. Very good. Because if you do conventional loan, rate is almost the same.
Is it a par?
At par. So we have to charge. But if we compare the rate at par with conventional loan, it's almost the same rates. Of course, for all this loan, the DSCR bank statement, we have to charge our client origination fee. But compare between conventional and bank statement rate is so good nowadays.
Wait, so bank statements you can do for owner occupied
Owner occupied and
and
non-owner occupied and second home.
Oh,
That's why it's so good. So most of the time, when people come to you and they qualify for term and bank statement, go for term and bank statement. Do not go to the DSCR or no ratio. Term and bank statement is the best program.
Even if they W-2, they can
No,
still do?
no, only self-employed. Good question. Self-employed for term and bank statement. W-2 earner don't get to do this. Self-employed, real estate agent, insurance agent, they all qualify for self-employed, and we can do their term and bank statement.
What if they get W-2, but then they have a lot of money in the bank? Can they still?
That's a different program.
That's a different program.
That's a asset depletion. That's different. Or APR, ability to repay. We have different program.
That's good, you know all those loans, huh?
Yeah, we learn.
Is this self, loan,
Processor.
are they, like self-employed too?
looking for.
No, loan processor, they learn on W-2.
Oh, okay.
I want to share with you one scenario regarding to which one I want to talk about. Okay. Term and bank statement. Term and bank statement. My client is a real estate agent, and in the past 2 years, he makes so good money. But in the last few months, since 2023, since January to now, he makes so little money. Okay. So when I received his term and bank statement, we're like, oh my God, how he gonna qualify for the loan? But luckily, he sold one of his property recently, and it showed up in the first 3 months of 2023. The net proceed that he sold the property, it go to his bank statement, over 100,000, and we can use it at his income. Because he is a real estate agent, he can be an investor. Investor is someone who make money out of selling property. So even though his income is so little in the last 3 months, but we are able to use the sale from the property he sold.
So do you average it out?
We average it out. So he qualified for a loan. You see how cool it is for the term and bank statement? So, but in that case, our real estate agent is an investor as well. He's a real estate investor because real estate investor earn from their investment, and that's their income. You see what I'm saying? So cool, right? I love term and bank statement. It's so awesome.
So they have to provide you business license?
Two-year business license, yeah.
So what's the underwriter looking for in the deposits? Is there a ratio or whatever that they're looking for?
Okay, same thing. We average it. We just average it. If it's personal bank statement, we average it 12 months, and that's the income. If it's business bank statement, we average it, and we take 50% of it as income.
50%.
So every single deposit, or do they tell us to explain what type of deposit this is?
No, because we will submit the bank statement as well, so they know.
That's why
Như and Jose know which to exclude, so they go through the bank statement. There are deposits that we cannot use. Like which one? Give him some example. I don't know.
Cash deposits
Cash deposit, really?
Yeah.
From personal or from business?
for the business. It has to be
Cash
like-
deposits still have to be excluded? Oh, and what else needs to be excluded from?
Zelle and Ramo.
Venmo and Yelp have to be excluded too. Okay. Okay.
And one-time deposit.
One-time deposit? Like which? How do we know it's one-time deposit?
Like if they are self-employed. So
They usually have like a the deposits usually go in through like some people use Square to accept like the payments and stuff, so you can see that if it's like comes from Square or like another type of software that they use for their business, we see that that's from the business deposit, but if it comes from a different
I see.
yeah, like a different type of deposit, then it wouldn't be
I
accepted.
see. So because every business we have some kind of system to charge, right? And if something comes from another system, it's not from that system, then it has to be
Well,
included.
then you're talking about the business.
Business bank account. We're talking about business bank account.
Yeah.
Anything else? I think money transfer. Also
Oh yeah,
explained,
if
right?
it comes from a different account, like
They wouldn't
personal
count.
account,
Personal account.
they won't use it.
They would use
You
it.
can, you
How about as a
explain it as
gift?
a
So we have to
No,
guide,
no.
the-
Give
we're
it
kinda
different.
saying
We talk about
from
e-com.
basic
we have to guide the client from now to until they get the house. Yeah, how to deposit the check, business check in.
Then how do we
Yeah.
deposit it? How do we deposit
Cannot
it?
use transfer, cannot.
So deposit like a transaction. Right?
Transaction, the check, right, the check is fine.
Yeah. Check's fine.
Okay.
Không transfer được. Yeah, no, they cannot transfer.
And a lot of time when they charge the credit card from the client, that works too,
Yeah.
right? The credit card pay from the client.
Right, as long as they see.
Okay.
Khó rồi.
So I think that's it for today. Thank you so much, everyone. Before we end it,